That would be Best Buy. Shares of the electronics retailer still down about 3.4% right now, but well off the session lows. This after the company reported disappointing earnings earlier this morning. Dominic Chu has been tracking the story for us from the newsroom. Dom.
Well, first of all, Sarah, you got to look at what's happening. Let's get you the headlines right off the bat, because the earnings numbers, yes, they did come in short. If you look at it overall, we're talking about 20 cents per share on an adjusted basis. That fell shy of the analyst estimates for 31 cents per share. Revenue is also coming in just slightly below expectations. The one bright spot was the comparable store sales pictures. The sales at stores that have been open for longer than a year, those came in at least the slowdown less than analysts had thought they were going to. But the company's conference call has just finished up, and there were some interesting themes that we wanted to talk about. I want to bring you some of the headlines here, because what they're saying is, first of all, that they see the U.S. economic conditions remaining soft here. They also say that their quarter reflects the bigger macroeconomic climate, the concerns about the economy. Also, that customers may be waiting for new product releases before they go out and spend more money. They've been hit in terms of their quarter by the softness in Europe, China, and Canada. Also, gross margins will be down for the full year. They see a lot of variability in the customer demand outlook, and really that their proposal to founder Richard Schulze in his attempts to make a buyout offer for the company, they still stand. Remember, the company, Best Buy's board of directors, did offer the due diligence, the confidential information at Best Buy. They offered that to founder Richard Schulze in his attempts to kind of look at the company, but they wanted a standstill period that would have taken them into next year, meaning that Schulze would have agreed to not make any direct solicitations to shareholders during that time period. Now, that's still a sticking point, but the company, Best Buy's board, said that their offer still stands to founder Richard Schulze. But as you just saw by the stock there, we're talking about a stock that's been beaten down again yesterday. Eric, down 10%, down a lot more earlier today, but we're seeing a bit of a bid come back to the market. We'll see if that stands as we head towards the afternoon session, Eric.
Dominic, thanks. For more on Best Buy's new leadership, CEO Hubert Joly, let's bring in a professor of management at Harvard who happens to be joining us today from Minnesota, where Best Buy is based. Bill George is also a board member at Goldman Sachs and the former CEO of Medtronic. Bill, it is great to see you. This story is playing out right in your backyard. Tell us about Hubert Joly. Do you think he's the right man to lead Best Buy at this time of, perhaps, for this company, unprecedented pressure?
Well, Eric, I know Hubert well. I think he's an inspired choice. I was totally surprised that the board went in this direction. But to their credit, they went out and looked for the best talent available. And I was also surprised Hubert left Carlson, because he's doing a great job there, and I'm sure it's a big loss to Carlson, but he has a great backup in Trudy Radio. But I think for Best Buy, he will come in. He's a brilliant strategist, a great marketeer, and he will take a fresh look at this company. He won't try to take them back to the 90s, which I think would be a huge mistake. Retail has changed dramatically in the electronic space. And you got to be a player in all fields, I think, today. I don't think you can just have big boxes out there, Eric. You need to be involved in e-retailing so you can compete with Amazon. You need to provide the services that Amazon doesn't provide. I think this is going to be critical. I've got computers all over the place, but I think a lot of people have multiple systems, and they need somebody to help them. They just don't plug and play, and I think you're going to need an integration. And I think Best Buy with its Geek Squad, and they have a new venture they call Simplicity. These are the keys that are going to give them the competitive advantage. And yes, there can be fewer profits in hardware, but going to be a lot more on the services side. And so I think Joly is the one to put that together. But the battle with Schulze is, I think, just starting, and this is could be a huge distraction.
Why do you say that? Why do you say the battle with Richard Schulze is just starting? What do you expect him to do?
Well, I know Dick. He's a very tenacious guy. He's a brilliant entrepreneur, founder, built the company. But, you know, he's had trouble letting it go after 46 years, Eric. That's a long time. And he had Brad Anderson CEO, and those are the best days of Best Buy, thanks to Brad. But I hope Joly will put some kind of rapprochement together with Schulze. But But right now, the strains between the board and Schultz look like there's a war about to break out, and it's very distracting to the customers and to the 170,000 employees of this company that are kind of in a state of suspended animation, waiting to see what happens. I don't think that's healthy, and I think they need to get that resolved.
How would that look? I mean, talking about some sort of collaboration between Schultz and Jolie, that's interesting. The man who founded the company and the man who perhaps could turn it around.
Well, this guy's got $1 billion of stock, and he doesn't want to see a stock keep getting depressed, and I think he was hoping for a big pop. A lot of the market was, and at this point it didn't get it. But putting together $10 billion to buy this company is not so easy in today's market. Might have been 10 years ago, and there was a lot more money out there before the crash of '08. But I think it's hard to put that money together. And I think Schultz would be very wise to work with them and to work out a plan to get the company on the right track. And he doesn't have to run it himself. He's in his 70s. He's got a home in Florida. Let it go, but let Jolie go do it. But work out a plan to get there. And I understand his dissatisfaction, but now's the time to get the company moving and not just keep it on hold.
Bill, if you were a strategist right now for Dick Schultz, what would you do? Would you go out and recruit, say, a Carl Icahn, somebody who is an expert in these kinds of specialized situations, these boardroom, these battles, if you will, between the boardroom and the outsider?
Well, if he wanted to go to war or wanted to go to battle stations, yeah, he'd do something like that. But I'm not sure how I kind of feel, because I kind of want to run it too. So I think he's going to struggle to get private equity people in the eyes. He's already made negative statements about this being a wasting asset. I think there's truth in that, and they got to get moving. And you can't have, look, this is not a little company. It's $50 billion in sales and 170,000 people. You can't have them sitting around waiting. You can't have customers saying, well, I think I'll wait and see what happens to Best Buy. They need to move and be at, look at what Howard Schultz did at Starbucks and how he brought that place back. It didn't go overnight, but boy, he brought it back because he got it right. And I don't think Schultz is going to come back into the business like Howard Schultz did. But I think he could make an agreement with Jolie and have this thing going. And Brad Anderson is another key player here, a terrific person.
From one Schultz to another, Bill, I know you're staying with us, so please just sit tight there. Harvard's Business School's Bill George will be back with us in just a few minutes.